You are watching Market Watch, the brief overview of the key events from the world of finance. It can be assumed that the main event of this week will be the results of the vote of the U.S. Federal Reserve's Open Market Committee. However, the probability of a change in the key conditions of monetary policy tends to zero, so I suggest paying attention to three events. First, comments on the decision on the key interest rate. It is important to emphasize that it is about subsequent comments, because they can influence market sentiment. For example, unexpected statements about the upcoming 2 interest rate cuts this year can provide significant support to stock indexes and collapse the US dollar. After the results of the vote on the Fed's key interest rate are announced on Wednesday, data on changes in the number of jobs created in the non-agricultural sector of the US economy will be released on Thursday. And only on Friday, unemployment data will be released, which, according to relevant experts, will remain at the same level. And although the upcoming release of data on the U.S. labor market is the second most important event this week, it will take place after the decision of the Federal Reserve on the key interest rate. Therefore, investors will have to compare the data from these reports with the comments of the head of the Federal. In any case, the risk of increased trading activity should not be excluded. The third most important, but perhaps the first in terms of influence, may be the reports of large technology companies. If Apple and Amazon can surprise investors with high profits in the first quarter and optimistic expectations for the second quarter, then key U.S. stock indexes will end the current week in the green zone. Of course, provided the Fed's neutral position and a relatively strong report on the U.S. labor market. This is the consensus forecast, which, by the way, looks quite logical. By tradition, we will conclude today's review by the cryptocurrency market. The main news was the information that the Depository Trust and Clearing Corporation announced that it would not provide any collateral to exchange-traded funds with Bitcoin or cryptocurrencies and would not issue loans against them from April 30, 2024. Simply put, now companies will not be able to use assets involved in Bitcoin ETFs as collateral. It is difficult to say how much this will cool the interest of institutional investors in Bitcoin ETFs, but this is clearly a bearish signal. Therefore, the risk of developing a deeper correction remains elevated. That's all I have. Follow the news carefully and be prepared for all the surprises of the market.